Welcome to Pet Sitter Confessional. Today, we're brought to you by Time to Pet and the National Association of Professional Pet Sitters. Bookkeeping and keeping good records in our business is a proverbial topic that never goes away, and it's something that we need to stay on top of, and not just because things change, but also our businesses grow and adapt and evolve. And so today, we are really excited to have Lindsey Roberts with Harquin Bookkeeping. She was previously with us on episode 339. So it's been a minute. So we're really excited to get caught up on how things are going and get some new information on what it means to be well organized, things that we can do in our business to stay moving forward and stay compliant with all of the the taxes stuff that come down the road. So, Lindsey, it's an absolute pleasure and super happy to have you back on the show. For those who haven't listened to 339, could you please tell us a little bit more about all that you do?
Yes. So my name's Lindsey Roberts. Me and my husband started our business back in 2008. That's 16 years ago. And our team has grown slowly over time. We do bookkeeping, payroll, sales tax, and some consulting for small businesses all over America. We have approximately 130 team members right now and a little over 850 clients we serve. And so we serve people from $10 million in gross revenue to $10,000 in gross revenue per year. So we try to be helpful to anybody who is in need. And that can be from, hey, I need to get registered with sales tax, to, hey, my QuickBooks is very ugly, I need your help. We are also our QuickBooks Pro advisors, so we help people in whatever stage they're at and with whatever's going on in their business.
Well, there's always something going on, unfortunately, both good and bad. But we're sitting here kind of in the middle of the year, and so from your perspective, Lindsey, what are things that we can do right now or try and get ahead of to have a better tax filing come next year?
Right. So we can talk about some generic things. I do want to end with a very time-sensitive thing that popped in my head we can't forget about. So don't let me forget that. But
okay.
So generally speaking, so you hit it on the head, Colin, when you're talking about adapting. Like, yeah, we're touching on this, but now you last year versus you this year is different because your business is different. So different things apply. So as always, bookkeeping is super important, and I'm not just saying that because I'm a bookkeeper. The reason we are in this business is because it is so important. And I'll explain why. So there is no magical cure or magical list of exemptions. I know there's a lot of, you're probably seeing lots of ads on Instagram and Facebook and whatnot, just saying like, listen to this seminar and we'll tell you how to pay no taxes and all that jazz. Well, some people walk away thinking there is some secret list. And mind you, there probably are some really high level thing for millionaires to, if you do real estate investing and all these things, and with depreciation, you can pay no taxes. Sure, there's that. But for generally speaking, everything you pay for your business to operate your business is tax deductible. So where I find, especially with pet sitters, where people aren't aware that they're doing things. Some people will even just take their point of sale list, like here's how much I made gross, and not realize mileage, even food that they buy, office supplies, computer, internet, cell phone. Like they're missing the more obvious things because they think, because your business is so simple. It's not like you're owning a retail store where you have to buy $100,000 of product just to start making money.
Mm.
So you guys are service-based, so it's a little different. So think about it from an outsider's perspective. What do I have to use in order to run my business? Well, internet is obvious. Cell phone's obvious. Mileage, obvious. And then office supplies, and then food. If you're buying food while you're out, that is generally a business write-off. I know even if you're you and your spouse run your business, you go out to dinner, make it a business meal, at least half.
Yeah.
There's a lot you can do. And so, yeah, so I just want to give you guys encouragement. So first of all, it's not as complicated as it sounds, especially the people on the internet when they're trying to sell you something, make it sound like it's mysterious. And, all you have to do is pay for something and you'll get the cool answers. And it's more of a lifestyle. When you're an entrepreneur, if you live a lifestyle of your tax deductions are all around you. I touch a little bit about home office, and I can kind of go over what that is.
I think home office is really important for us to know, because we run a lot of times we don't think we're eligible for things like that because, well, I don't have a place that I go to. I just do this at my kitchen table, or I just do this in a bedroom or something like that. So what is a home office, and really how does it qualify?
Right. So the IRS would qualify it as a dedicated space that's used exclusively for business. Will they ever know if it's 100%? Like, a lot of people will use a spare bedroom and they'll have a spare room in there, a bed in there, and it could be technically used for other things. But it's your main point of business. So what you do is you take that square footage of that space. So say it's 100 square feet, and you take the total amount of your home square footage, and then you divide that out. So if it's, I'm just going to use numbers because off the top of my head, because I don't trust myself to do good math on top of my head. So say your home is 10%, your home office is 10% of your home. That means you can write off 10% of your utilities. If you rent, 10% of your rent. And even repairs and maintenance. So if you add on to your home, or you repair part of your home, if it's your office, that's 100% deductible, that part of it. So that is an awesome thing. But normally you have to be your own advocate when it comes to tax deductions. So but keeping track of that, a lot of people think, oh, it's because I'm paying for my mortgage or my rent out of my personal account, so that's not a business deduction. It's not a part of regular bookkeeping, but it is a part of what you're going to give to your tax person at the end of the year and say, okay, here's my home office and here's all of my home expenses, so that they can do the calculation and put it on your tax return.
I think that's what's really important there. Of most of us think, oh, I use my business account, my business bank account to pay for this piece of gear. So that's an obvious deduction. I think that's where a lot of us stop. But then it's going, well, did you use any personal stuff for a percentage of the business? And that's where it sounds like you really do get a lot of power in finding extra deductions.
Right. And that's why it's just really wise to even watch your personal bank account. I know that all of us are guilty of maybe putting something business on the personal or personal on the business card, to watch that. But yeah, your cell phone, I think, is the biggest one. And I think, if you're in a family plan, it doesn't make sense for you to move it all to the business account or start a new account just for one person. But you just have to keep record of what you paid and how much of that, bill is for the business. And then you can get that as a tax write-off.
And that's actually a question that I was thinking of there, Lindsey, of the cell phones, because I know we live and breathe and run our entire business on our phones in a lot of cases. What's the decision tree of, okay, I need to go, instead of getting just the percentage deduction for my personal that I use for my business, when does it make sense for me just to go and have the business pay for its own separate cell phone and plan and everything like that?
I would say it's purely if there's savings. Now, sometimes there is savings. I know when it came to our family, when we were deciding between internet providers, it actually made more sense to go with a business account instead of personal. I would just say it's purely if you can save money. With us, with our business, we're 100% on the internet. So internet's like extremely important. So what other factors we had to take in consideration is customer service. Like, if there's a problem, how soon can we get it fixed? So we learned that the hard way. Like, we switched to Starlink, and it was going great until we had a problem. And then we reached out and we only got AI. I was like, oh yeah, that's important.
That is a really good point. And in a lot of cases, the business version, it's the same internet speeds, it's the same hookups, it's the same everything. But the person you talk to on the other line, a lot of them, they'll have a direct business representative and a direct business account. I know we have two different locations. So we have a home office and we have a remote office in our other service area. And that's the thing. We signed up and they went, oh, it looks like this is a business. Here's here's your little code that you enter when you go through the help that kind of pushes you through to get to somebody more quickly whenever you need it, because it is imperative that, well, I don't have time to sit here on an hour-long phone tree. So I'm wasting a lot of things right now.
Right. And so with your business, it could be self-providers. You have to weigh out like price and what you get for that price. It might not make sense, or it makes a lot of sense to stay just with your personal account. Even insurance, when it comes to insurance, that's another thing. Is it easier to group things together or to separate? I would look at it both ways and see pros and cons.
It is all about going, okay, what make the best decision, and really understanding what's important to us, because just the face value of, well, I may save some money, it may be a little bit more expensive, but what's the experience of using that? And do not discount the importance of having good support and a good helpline, because that's, again, just like you, we went down that road one time where we thought we made a good decision with softwares and stuff, and then we were like, oh, there's nobody here.
Yeah,
And
you reach out and you're left alone.
and I'm losing business. Oh no! And it's one of the worst feelings to have, and that's so far removed from just a pure tax decision. And I think that we can swing both ways, can't we? Of too often we're like, well, this is the hard by the numbers decision, and we lose track of the more some more important stuff or interactive kind of
Or
decisions.
valid.
Yes, exactly. Yeah.
Yep. Yeah, trust me, I'm an accountant. I tend to go the cheapy route as much as I can. But as I grow my business, I'm like, you know what? My time is more valuable than my money in a lot of cases. So, and either way, it's a write off. So it's like, okay, if it saves me a lot of time and I have to pay a little more, it's still a write off. So it's good and I can afford it.
Well, and that's important too, as you mentioned. I have the money for this. I'm not just going out and spending money that I don't have just to get something. So I know a lot of times we get the hit midway point of the year and we start looking at what the last 6 months were, doing some projections for the next 6 months, looking at some anticipated taxes and stuff like that. And you can get into that mindset of, oh, I'm going to owe a lot more this year. So where can I spend versus what deductions am I not taking advantage of?
Right. And that's why one of the reasons of having a professional bookkeeper is so helpful, because they're already looking at other people's businesses and it's like a second nature to them. They notice what's missing and what's not there. Or the reverse is true. Like, hey, I think it looks like you think this is a business write-off, but it's not. We've had a couple interesting times where people try to put something in and it just flat out wasn't a business expense, like plastic surgery and whatnot. Like, yeah, it's true. So yeah.
Right.
Oh, well, like, okay, well, let's let your tax professional decide. We'll still put it here in its own special category, but it's nice to be able to bounce things off of people and like, hey, what are other people doing? Some people work it out with their CPAs where they can actually pay themselves rent instead of doing a home office deduction. Yes, there's special rules about that and how that's done, but when you have a tax professional on your side that you're bouncing ideas off of, you can make a plan that works for both of you, and saves you tax deductions.
Well, and on the deductions aspect here, I don't know if this is a fear of anybody else or if it's just me, but sometimes whenever we're sitting down taking deductions, I can start to worry that I'm taking too many, and I can feel like, oh, is this bad that I have all of these here listed here? Is that a thing? Or is this just in my head?
It's a really bad thing, actually. A lot of people do that, and we actually have even people overpay purposely on sales tax because they feel like if they just throw extra money at the government will leave them alone. And it actually, I'm mad on their behalf there's a lot of people who miss out on deductions just because they're afraid that they're overdoing it. So there is a middle ground. I know there's two ditches on every side of every topic, but I would say as long as you have a system where you justify it, you have a system of writing things down, you're going to be just fine. I know one of the major deductions that people don't utilize is paying their children as employees. That's a huge one. You can pay your kids tax-free up to $12,000 a year each for wages. And yes, you can do that. And there's people that have abused it. They didn't write down what their kids actually did, and they just basically, gave them money for free. But as long as you document well, that's a huge tax deduction that nobody else has. That's tax-free. Your kid is getting that money without having to pay any unemployment, federal tax, state tax, local tax. It's all tax-free. So, but again, I know a lot of people who are afraid, like, won't that put the target on my back? I don't know. I've never known anybody who got audited because of that. I have heard some stories of people getting audited, but it always ended them, with paying over six figures of tax. Like, well, if you're paying over six figures in tax, you're doing a whole lot of lying. That wasn't just, a couple here's and there's. Where people don't understand is the IRS does compare how much you deposit versus how much you claim as sales. So I think there is an algorithm, I guess you would say. But I've never heard, we've been in business 16 years, helped thousands of businesses, and we've only had one client ever get audited by the IRS. And it's because, I might have told this story last time, but it's because she had a bookkeeper before us who just filed her taxes with only half the bookkeeping done. So it was her first year in business, and she ended up owing $18,000 in income tax. And obviously that's wrong. If you own a restaurant in the first year, you owe $18,000 in tax. That's kind of suspicious. So she had us redo the bookkeeping, found out she actually lost $20,000. So she asked for the money back from the IRS, and they said, okay, we'll give you the money back as long as we can audit you.
Yeah.
That makes sense. If you're asking for $18,000 back, that makes sense.
Yeah.
So you can learn from her lesson, do it right the first time, because they don't give money back for free. It costs.
Well, and it sounds like as long as that justification is there, right, in your because again, that deduction is there. It's not an illegal deduction. It's not a loophole. It's there on the books, meant to be taken. It's just on us as the business owners to take it responsibly and take it in the right way. Because you can abuse things, but if you are aware of that, if you're intentional about what you're doing, you're keeping track of things, writing things down, then there is justification for that. Because I think it's also important to note that just because you get audited might not mean that you did something wrong. You just fell into the random audit pile that year, and they're just trying to drag net and see what's going on.
Praise the Lord that they have a short staff. When we first started our business, there were a lot more audits. It was more of a real threat, but over the years, it's dwindled a lot just because the IRS is struggling so bad. So, I would just be more confident in tax deductions. And again, throwing more money at the IRS isn't going to help help you at all.
Have you heard of Time to Pet? Dan from NYC Pooch has this to say.
Time to Bet has been a total game changer for us. It's helped us streamline many aspects of our operation, from scheduling and communication to billing and customer management. We actually tested other pet sitting softwares in the past, but these other solutions were clunky and riddled with problems. Everything in Time to Pet has been so well thought out. It's intuitive, feature-rich, and it's always improving.
If you're looking for new pet sitting software, give Time to Pet a try. Listeners of our show will save 50% off your first 3 months by visiting timetopet.com/confessional. Well, you mentioned the hiring of kids in a business, and especially for our own kids. I think that's what's important here is we're hiring our own kids. If you have kids, not others, there's labor laws for that. But okay. What does that look like? Because it's out there. It is a little weird of what that would look like. So what kind of things do we need to prepare for that, and how do we get that set up appropriately?
So what that looks like is when you set them up on payroll, whoever's doing your payroll needs to know that they're your child and that they're tax free. There can be some confusion there. Not a lot of people take advantage of that, and so you wouldn't want them to pay taxes on accident and then have to get a refund. So that's the first thing. The second thing is you can not be an S corp. So if you're an S corp, you cannot pay your kids tax free. You can still pay your kids; it's just not tax free. You lose that benefit. So if you're an LLC, taxed as a sole proprietor or a sole proprietor, you're allowed to take advantage of that. And our current tax code says you can earn up to $12,000 without paying federal income tax. So so that's where the 12,000 comes into play. But yeah, so you pay them on a regular basis, and just like you would another employee, except no taxes. The big thing that I've heard of people in the past that abuse this is they didn't document what their kids did. So you should have a process in which they document. Now, for our kids, we use Harvest. I think it's called harvestapp.com or something like that, or Go Harvest or something like that. They can set up a free account. And as long as they only have, I think, one client, it's free. So that way, when they do work, they're clocking their time. We're not always the best at it, but we do our best. And one thing they also take in consideration is that a lot of states have graduation requirements that require them to work in businesses in order to graduate. So you can be tracking time for paying them, but also tracking time for graduation purposes. Which is really cool. Two birds with one stone.
I had no idea that was a requirement for some people either. So
yeah.
And this is, for us in the pet sitting world, it's finding, I think what people can also get hung up on, it's finding the right tasks that are age appropriate for kids to do, right? It's not, oh, I'm going to have my 8-year-old do an overnight where they stay at a client's home by themselves. No, it's not that. It's going, is there some paperwork? Is there filing? Is there cleaning of the home office? Is there other things like that they can do?
Right. And I mean, even being an assistant or shadowing, kind of like an intern situation where they're watching you with your customers and how you handle yourself. That not only is going to, meet all the requirements of working and getting their hours in for, graduation purposes, but you can also, Lord willing, pass this business on to them in the future. Like this might be something that they really love, and you're teaching them how to be an entrepreneur, good customer service, working hard, going over and beyond. That's not something people generally just pick up. It's something they have to watch. So there's a lot of benefits, like not just the money part either.
Yeah, you're building your own little human there, right? And building an adult, right, to go off and do more things, and that aspect too of going, yeah, if I'm thinking beyond myself and my business, how do I know to whom I can pass this down, or to what happens whenever I'm done with the business? Do I sell it? Do I have a procedure for passing it down to somebody else? Do I need to bring in another partner or whatever? But yeah, if we've got kids going, hey, are you interested in this? And the only way that they're really going to know if they're interested is by being kind of a part of it. And sure, it might feel weird going, well, my 7-year-old is in my business. They're not going to buy it tomorrow. But what they can do is develop skills so that they're that much more ahead of the curve if that time does come where they need to take over some aspect of it.
Right. Or just start another business. Entrepreneurship is so... there's so many hats you wear, marketing, customer service, accounting, operations. There's just so much wisdom to be learned in just a small business.
Yeah, I know we recently actually did hire our two kids in our business and having them do the paperwork and do that kind of stuff. I think that was a big aspect too of sitting down with them, like with the we had with the job offer and having them read the job offer, because the number of times that I've heard of people who didn't read the job offer and they're surprised by the requirements, like just little skills like that come out of going, when somebody hands you a contract, you read it, because you need to know what's in that. And this is why that's important. All those skills are so much more, like you said, Lindsey, above and beyond just paying them a payroll so that you can get tax-free money for them.
Yeah, I'm just thankful for the people who lived hundreds of years ago who put that in or 100 years ago, who put that in the tax law, because like that is important. I think our society's kind of moved past that to where we don't have the mindset so much anymore that we're investing into our kids life skills. So yeah, I'm just super thankful that that's there, and it's starting to get more popular again today. So I'm thankful for that.
Well, yeah, because it used to be that kids would just naturally be part of the family business. And so they were doing all of this work anyway. So it was actually a tax advantage to go, okay, well, this is a way that you've been operating. Here's another way for you to benefit from that and for them being involved. Again, when it's your kids specifically that you're trying to get involved in the business. And with that, you mentioned the tracking of hours. I know we had talked a little bit about this as far as the tracking of expenses. I know in QuickBooks and in other softwares, there feels like there's about 1,000 different ways to classify each expense or each thing that comes in, or the categories that they can fall in for expenses. How granular do those need to be, or should they be for proper record keeping?
So I'm glad you asked. This is one of my soapbox things that I like to educate people on. I think as human beings, we tend to make things as complicated as possible. Like when we dive into things, we're all about it. And we're like, I'm going to be as granular as I possibly can be. But then when you go on to the next month, you figure out like, man, I just made this super complicated. So what I recommend is going as simple as possible. And ask yourself, what do I want to know? Now when you open up a QuickBooks account, there's general accounts on your chart of accounts that will come in, and that's generally what your tax professional is going to need in order to do your tax return. But as a pro advisor, I see a lot of people that go over and beyond that and make it granular. So, for instance, you might have an example of where a retailer has their travel expenses broken down by airline, fuel, travel, meals, conveniences, taxi. Like us at Harquin Bookkeeping, we don't need that because we hardly ever travel. So I don't need that grant. I'm not tracking like how did I do versus last year on how much airlines I paid for. But if that's something you want to know as a business owner, then I recommend you do it because you can make decisions off that data. Another one might be insurance. Like if you pay for multiple types of insurance, you might want that with subcategories. You might not. Utilities is another one that's often used. Automobile expenses, you could just lump them all in, or you could have sub-account: lease, fuel, registration, maintenance. Do you want to know that data? So that's what you have to ask yourself: is what do I want to know next year at this time? What do I want to compare? Am I paying more for a thing or not? Because that's really when you cross over from using your financials as just to get my taxes done to you're crossing over to using it as a tool. Where can I improve? Dues and subscriptions is normally a big one where we will sign up for a subscription and then kind of forget about it because it's little and it accumulates. Well, you can compare last year to this year and say, okay, well, dues and subscription went up a lot. Can I pull that back? Meals and entertainment went up a lot. Can I pull that back? I know a lot of them, when you're doing really well with your business, meals and entertainment kind of follow that pattern because we're so busy we don't eat right and we are doing quick meals and all of that. Well, sometimes that's one of the things we can check ourselves, like, okay, I can cut back in this category. But you only do that if you're looking at your financials as a tool and not just surviving until January. Like what, because I'm being honest, like that is a really important number. Whatever that bottom line is, that's super important. But when you kind of graduate as a business owner to, I want to do better. I want to be around in 5 years. I want to make my business into an asset, which is a big thing that we've been pushing at Harquin for a little over a year. And we kind of touched on it earlier about having a legacy and passing this business on, whether selling it to somebody else in the future or passing it to our kids, building it so it's worth something when we're done with it. And look at all the old rich families. It's all about their finances. It's all about how you manage things and not doing bank balance accounting where, I have money in the bank, I'm good. And I've been there. It's just we have to graduate from that.
You mentioned the finances as a tool there, and how that really starts with understanding what you want out of it. What data do you need? And that's understanding what kind of business do we run? How am I operating? You touched on like the car expenses. Like that's an amazing thing to keep track of in the pet sitting, because we use our cars so much, because you might find, I've crossed that break even point to where now my business should probably be buying a car that I'm leasing back or whatever that looks like for us. But I'll never know that unless I'm keeping track of all of these expenses on both my business and my personal side. Whenever, because again, if it's a personal side, we're gonna be buying the oil changes out by ourselves and stuff. The business do that. But if those add up because we get really busy and we're doing a lot of business and we're consistently that way, well, that may need to switch over at some point. But we don't know unless we track. But also, the other part of that is you mentioned like, okay, what about a year from now? Because I know what I do is I make all these beautiful categories that I remember for exactly 11 seconds. And then the next time I open to look at it, I forget that I've made any of them.
And what does that mean? Like I made that category, but what's that mean? It could be this or it could be that. I don't know. And yeah, that's exactly right. 11 seconds.
Because I found that I would make a category and then I would forget and go back to the next month, and then I'd actually make the same category, but it would be worded differently. And then I'd have duplicate categories for the same stuff. And I was like, oh, right. I just simple, Colin, because you don't remember anything.
Well, yeah. And I have 2 points. So back in the day when we first started back in 2008, I would look at someone's financials and it would say like telephone expense, phone expense, cell phone expense, and long distance expense. And they're all the same thing.
Yeah.
So I used to make that joke, but long distance doesn't make sense anymore. You can't really make that joke anymore. But you brought up a really good point of something that one of our adamant points about Harquin is when we do our clients' books, we always have a second pair of eyes that look at it because of those duplicate entries. Like, for instance, if you pay for a QuickBooks subscription, 1 month you might put in software, 1 month you might put in dues. I see that all the time. It's so inconsistent. And so we want to make sure those are all going in the same category, because how can you compare and see their prices are going up? How can you say, okay, I can afford that or whatever, if they're all in different categories, and then you don't really have good data.
Right. Yeah, and then you can't make those good decisions of, do I need to move off this? Do I need to be allocating more towards my business operating expenses here, or do I need to go out and try? How do I allocate my personal resources? Do I need to become a marketer for a couple of days so I can try and drum up more business, or do I just need to go and do more work, or whatever that looks like, so that you can make that make the finances work.
Right. So yeah, consistency is very important. So, we always recommend after you do your bookkeeping and you reconcile it, you always go back and look at your P&L detail and just glance through it. Does it make sense? And maybe you look even at the last 6 months and say, am I being consistent? Because that's where you're going to find your mistakes. Another one we often see is we see interest expense get posted to insurance expense, just because people are going too fast when they're doing their bookkeeping. Also looking at your balance sheet. If you've ever sat in any of my classes, I always talk about the balance sheet. It's the most neglected report, but especially if you're using like QuickBooks Online, and you connect your bank account, if it doesn't know where things go, it can put it in this account called uncategorized assets, and it's just expenses that aren't being written off. And people don't even know it's there, and it just accumulates. So look at your reports and make sure you know what they mean, especially if you're doing your own bookkeeping, because a lot of people assume their tax professional is going to dig in their the reports and make sure they make sense, but they don't. This is kind of another soapbox. There's an accountant shortage right now. They said 75% of all CPAs were retiring or hit retirement age in 2020. So people don't get paid to care anymore because the dynamic has changed. Now it's like a desperate plea to get everyone as fast as possible. It's like, it's different. There's no more competing about good quality. It's like more like a farm production, like next, get them in the door. Yeah. So you have to be your own advocate. And I'm speaking from personal experience with all this. We work with hundreds of CPAs every year. And when we inherit a file, we do the legwork to make sure we're understanding their QuickBooks file and where all the data is. And I can't tell you how many times we found giant mistakes that the CPA did not catch. And they have to either refile or fix it on the next tax return. So be your own advocate. Look at the balance sheet. Make sure there's nothing there. Because if there's expenses being posted there, that means they're not on your P&L, which means you're not getting a write-off.
Today's episode is also brought to you by the National Association of Professional Pet Sitters, or NAPS. They're the leading nonprofit organization supporting professional pet sitters and pet care professionals. NAPS offers valuable resources like certification programs, continuing education, and a nationwide network to help you grow your pet care business. Whether you're just starting out or looking to take your business to the next level, NAPS is here to support your journey. Join a community of dedicated pet care professionals and elevate your services with NAPS today. Learn more and become a member at petsitters.org. Turns out, running a few simple reports, but also just reading them and understanding them, because at the end of the day, it's not your CPA who's going to be audited. It's not your bookkeeper that's going to be audited. It's you, you, the owner, right? You are going to have to justify and explain what happened or pay the associated fines. That's just what happens, right? So knowing, and I love that, of running 2 or 3 different kind of reports and going, do all of these make sense? Because that P&L and getting that big summary, looking at the categories that are there, like you'll really be able to see, because that's where actually I ended up catching some duplicate categories eventually, because I was running that and I go, those are kind of the same. Okay, right. And so I was able to go and merge all those together and make sure that it was a lot simpler. And so knowing I have reports that are powerful. So you mentioned looking at the balance sheet. You mentioned running P&L. Any other kind of reports that you think that more business owners should be looking at or running regularly?
Yes. So another big mistake that I see, especially if you hook your point of sale up to your QuickBooks account or your QuickBooks Online account, is look at, if you see on your balance sheet accounts receivable or accounts payable, you want to run the open invoice report if you have accounts receivable listed, and unpaid bills detail if you have accounts payable listed. And what that's going to show you is everything that QuickBooks says is an open AR or an open AP. The reason why that's important is because if you have something in there that's not supposed to be there, it's affecting your P&L, your bottom line. So here's a good example. Back when I first started, probably a couple years in, probably about 2010, I went to an older woman's house and she rented houses. And so she was receiving her deposits to accounts receivable and not to sales. So accounts receivable is a balance sheet account. So when I looked at her P&L, her income was, let's just use simple numbers, was $10,000, or her net income was $10,000, but her balance sheet had her accounts receivable at negative like $600,000. And I was like, hey, I think you're entering these payments wrong because you're putting them to the balance sheet, you're not putting them into sales. It would make sense if you had an invoice and then a payment and applied them together. But that wasn't the case. She just did the payment without the invoice, so just a negative accounts receivable. Oh. And I had her look at her tax return, and she hadn't claimed her sales in years. She was doing her own taxes, and because it didn't show up as an income, she didn't do it. I don't know if she was super interested in owning up to that because she was a DIY type person. And I think she's just going to move forward. And I was like, that's between you and the IRS. I just want you to know I've documented. But when you, and I just saw somebody the other day who had their point of sale that was just dumping every single sale in, but wasn't recording. So what it was doing is recording the invoice and then recording a deposit, but wasn't connecting the two together. Oh. So this QuickBooks was double counting. There was a client we took over who had been doing her stuff for years, and we found out where QuickBooks Online was downloading data. It double downloaded all data, and because it was double, it reconciled. Right when she just select all reconciled, it reconciled because double of everything. Yeah. She double counted her sales. So I'm kind of a leery person when it comes to connecting things to my QuickBooks, just because I like to enter things and know that I put it in the right category and not just hope. But we also have to be aware that when we connect things to our QuickBooks accounts and it's just auto dumping data in, you're now responsible to find all of it. And there's a whole industry out there just cleaning up people's QuickBooks files, and there's a reason why.
Well, and that's a good reminder, too, of as there become more automated processes, as AI becomes a tool that I know QuickBooks is looking to use AI in a lot more of its products, and other financial institutions are looking to figure out how can we automate a lot of this, have little help tools, have little widget tools. Again, it doesn't matter what's being placed before you. If you don't either A, understand it, or if you B, aren't double checking, none of that matters, because that's there to assist you. That's not going to tell you, because numbers will tell you exactly what the numbers are meant to do. But if you don't understand what that number is, it's completely meaningless.
Right. And again, your balance sheet normally tells you if you're off. So if there's something on that, you need to ask somebody for help. If you go on there and you don't understand something, ask somebody for help, because it could have bigger ramifications than you realize.
I did want to touch on vehicles for just one more moment here, because again, we use vehicles all the time. You mentioned mileage is important too. How is there a proper way that we should or should not be recording mileage and keeping track of that?
Right. So it is simpler than a lot of people make it out to be. There's a lot of cool apps, and some of them cost money, some of them don't. You just have to find a tool that works for you. You can even get an Excel spreadsheet that just keeps track. It's just basically recording your odometer begin and end for a trip that you do. You could do that, or if you have the same client every week, or you service them 10 times a month or whatever, you could just say, okay, client A is 5 miles times 10, so that's a 50-mile write-off. You could do it that way. But yeah, it's whatever works for you that makes it easy. You just have to have a system and then stick with it. The only time that you might be thrown off if you do that system is if you go to a one-off situation, or you go to like a convention, or something that doesn't happen every day. But other than that, as long as you're keeping track of your appointments and how many times you went to that appointment, I think it's really easy. Some people even use their calendar. They'll once a month go through their calendar and say, okay, here's how much I used for the month.
How does mileage tracking change if we're using the home office deduction?
It shouldn't change a whole lot. So for instance, if you guys had a standard office that you went to, so I know you said you have a remote office, you can't count the mileage from your home to your office, because that is going into your place of business. But from your house to your different clients, that is a write-off.
Yeah, and again, knowing that, okay, I can use that now, where before it wouldn't have been counted as a write-off, but I can now go, oh, well, I have a home office, I'm going to my clients, and I can include that.
Yep. And then, like I said, if you go to a conference, you have to even go get something for your business. So say you have to go to PetSmart or something to pick up something, that's a write-off too. getting supplies. You just have to have a system that works for you, because if you forget about it, it's not working. So you have to have something, a piece of paper, so you don't forget.
Yeah. Yeah, I know they used to have logbooks in cars and things like that. And just however your brain is going to function best, so that you can be consistent with it.
Right. Consistency is key.
Well, in our industry, and I know a lot of people face this too, of going, okay, I use my car for business so much. And I kind of alluded to this earlier with the cell phone thing. Have you seen any instances where it starts to make sense where maybe the company needs to just buy a car and you need to just have a company vehicle for the kind of work people do?
Right. So where I would say it makes the most sense is if you can get a car that is more energy efficient, it's going to cost you less gas, less insurance. Then go ahead, and you're at that point where it's time to buy something. Talk to your tax professional, but most of the time it does make sense for your business to go ahead and purchase it, especially if you're only using it for personal, a very little amount. But yeah, and then you can get advertising on the side of it, and you can go crazy, and that's all write off. So work with your tax professional, because if you don't have a plan with them, they might misinterpret what you're doing and say it's all personal. So that's why I always just recommend having a relationship with a tax professional. You guys come with a plan, and we stick to the plan, and you guys can communicate what you're gonna do with your vehicle. But yeah, if it saves money, and you're at that point in your business where it's time, you can go ahead and purchase the next vehicle in your business's name, especially if you're driving a lot of miles. If you have a personal car that you want to convert to business, I believe it's called the Section 179 deduction, and you can do that. You just have to talk to your tax professional to make sure it's done properly.
Yeah, it's a little bit more than just the business writing you a check that you deposit in your personal account. There's some paperwork that goes along with marking what's going on there.
Right, and there's also state regulations. That's why I just always want to put things on people's radars, like this is a thing, but you have to work with your tax professional. That way it's well documented too. So if anything ever happened to them, you go to a new tax professional, it's well done and not chaotic.
Lindsey, I really want to thank you for coming on the show today and walking through these big topics. I know that sometimes this can get very overwhelming for people, mostly because we already have a lot on our plate and we can suddenly become, oh, that's just one more thing. I can't even, it's just too much. So I appreciate you breaking these down for us and encouraging us to try to document and to seek after those deductions and be diligent about those and making sure that we're recording things properly. I know there's a whole lot here. This is, again, a topic that it never gets any smaller, as what I've found. It's always just more and more things to worry about. So if people want to get in touch, pick your brain, or see everything that's going on at Harquin, how best can they do that?
Yes. So you can reach us at harquinbookkeeping.com. So it's HARQUIN bookkeeping, and that's a weird word, .com. And just reach out to us. You can also email admin at Harquin Bookkeeping. If you have any questions, it can be forwarded to me. You can reach out to us on Facebook or Instagram. But yeah, we'd love to help you. We know it's confusing, especially even applying things to your own individual experience. Like, here's my situation. How can this help me? So yeah, we'd love to help you. There's one more thing I wanted to say that is kind of time sensitive. And all of you that waited till the very end can hear this, but so there's something for 2024 that all businesses that have to do, if you're an LLC or an S Corp, that you have to do, is called the BOI, the Beneficial Ownership Information Act. There's some kind of act that happened in 2021 where the federal government wants all business owners to register with the federal government. Right now, when we register our businesses, we do it through the state. The federal government wants us to register with them because to help them understand who owns what business and to prevent fraud. So if you started your business in 2024, you are required to do it as soon as possible. If you started your business prior to 2024, you have until December 31st, 2024. It's not hard to do at all. Basically, all you have to do is, I think you can just Google it. It's like FSIN or something like that. government website. And you just have to give them your personal information and upload your driver's license or passport, and that's it. It takes probably 30 seconds. The only thing that would be a little more complicated is if you started in 2024, they also want to know the personal information of who helped you start your business. So if you had a lawyer help you register your LLC or something like that, they want the lawyer's personal information too. So it's kind of weird. Ain't gonna lie. But, you can do that, and it asks you all the questions. But if you had your business, or you're the one who started your own business, like, filling out the Secretary of State website information in 2024, or you just have been in business longer than 2024, it takes probably you less than 5 minutes to do. I just don't want you to forget to do it since it's new to this year.
Yes. And I will have a link to that in the show notes, because that's been one of those things that they announced it at the beginning of the year. And I think a lot of us were like, oh yeah, I'll get to that. I've got 365 days. Absolutely. No, a lot of people still have either A, not heard about it, or B, it's a saved tab in our browser that's still sitting there. We need to do something about it. So
I've done it, and I can attest it only took me 5 minutes.
Okay. Well, very good. Well, I will make sure the links in the show notes and to your website and the email as well. Lindsey, thank you so much for coming back on and encouraging us with all this. I really, really appreciate it.
You're welcome. It was nice being with you.
It's always a good time to review not just your expenses, but how are you preparing for tax season and whether you're getting all the advantages that you possibly can. The number one thing you can do right now, whether we're approaching the end of the year, starting a new one, in the middle of a year, whatever it is, get organized. The best tax professional in the entire world can't help you if they don't have good data to work with. If you're not tracking things, if you're not categorizing them right, if you're not keeping things in an organized manner, no amount of professional help can benefit you. It starts with us taking ownership and letting the onus fall to us to know that we have to do that aspect of this, so that when we go to ask help, when we go to make big decisions, we have the data to back it up. And that makes for a really powerful business. We want to thank today's sponsors, Time to Pet and the National Association of Professional Pet Sitters, for sponsoring today's episode. And we really want to thank you so much for listening. We hope you have a wonderful rest of your week, and we'll be back again soon.